before I introduce what we are going to do today, you remember there are 5 categories of ratios. If you've done interpretation of accounts before, there are 5 categories of ratios that we could talk of. Can anyone mention any of these classifications of ratios that you know? Any that you know?
Profitability ratio.
Good. Profitability ratio. Any other?
Liquidity.
The liquidity ratio.
Liquidity. Gearing ratio. Is that Richmond? Is that Richmond? Any other? Any other? Any other ratios? Because they are supposed to be 5. You've mentioned 3. Any other? Any other ratios that you know?
Efficiency ratios.
Efficiency ratios. Any other?
And then investment ratios.
Investment. Yeah. Can someone just mention only one ratio under profitability? Only one, just one.
Returns on capital employed.
So ROCE.
Yeah.
Right? Can someone mention only one under liquidity? Only one.
Quick ratio.
Quick ratio. Can someone mention only one under gearing?
Debt to equity.
Debt to equity.
Debt to equity. Can anyone mention only one under efficiency?
Asset turnover.
Asset turnover. Can anyone mention only one under investment ratio?
Earnings yield.
Earnings yield. Okay. Earnings yield. Okay. As for investment, I need more. Any other?
Earnings per share.
Earnings per share, EPS. Any other?
Price earnings per share.
That's price earning ratio, P ratio. Any other?
Dividend yield.
Dividend yield. It's okay, eh? If I continue to ask you any other, I think you can mention at least 2 in addition. But let's assume at least you mentioned 4 is okay. So why am I asking you for all these ratios? It's because today's topic we are going to treat is on earnings per share, this one, EPS. So I'm doing IAS 33, earnings per share. So that's the standard I'm treating, earnings per share, IAS 33. I'm treating IAS 33 EPS, earnings per share. Can anyone tell me how to get the earnings per share? Because it's an investment ratio. How do we get it? What's the formula for getting the EPS? The earnings per share. The earnings per share. If you know, you tell me. So one thing you should know is that earnings means profit. Earnings means profit. So the profit per share. So mean that we divide it by the number of ordinary shares. So it's the profit over the number of ordinary shares. So that's the profit over the number of ordinary shares. So someone will be asking, so why is it that this particular earnings per share, which is a simple calculation, becomes an accounting standard? It's because earnings per share is one of the most important information that needs to be disclosed in the financial statement. So it goes into the notes of accounts. Now, shareholders requires managers and management to be able to tell them what they are earning on a share. It tells them, or it gives them an important information on the ability of the company to pay them their dividends. So the earnings on a share is a very major investment ratio. It's also able to attract new investors into the company. So at any point in time, companies need to report the earnings they are making on a share. So that's why it's an important ratio that we are going to look at. Now, with this, basically we are done with earnings per share. We are supposed to be done with it. It's just a profit over the number of shares. So why is it that it's an accounting standard? It's an accounting standard because there are tricks in it. When you are reporting earnings per share, there are certain tricks and there are certain conditionalities that you need to fulfill as per IAS 33. If you don't fulfill those conditionalities, you cannot report the earnings per share correctly. So the first thing you should know is that there can be a trick with the profit. So I call it the trick one. And also there can be a trick with the number of ordinary shares. I call it trick two. Take note. It means that in the examination, the examiner can trick you on the profit. In that case, he might give you profit that you need to do some adjustments to. So then it means that what kind of profit do we need to be able to calculate the earnings per share? Please take note. What kind of profit? Is it just any kind of profit? Is it profit before tax? Or is it profit after tax? Is it the net profit or is it the gross profit? Or is it the operating profit? What kind of profit do we need to calculate the earnings per share? So meaning there can be a trick with the numerator and there can be a trick with the denominator as well. So you take note of that. So we are saying that the kind of profit that you need to calculate the earnings per share to address the trick one is that you need the profit after tax and preference dividend. Take note of that. You need a profit that we've already deducted tax from and a profit that we've paid the preference shareholders their dividend. Don't you think that after paying tax to the Ghana Revenue Authority or to the Inland Revenue and paying preference dividend to the preference shareholders, what is left is for the ordinary shareholders? The ordinary shareholders are the true owners of the company. They are the ones that the earnings that is left goes to. So then the earnings per share we are calculating is for ordinary shareholders. That's why the denominator was over the number of ordinary shares. It means that you cannot divide it by the total number of shares. We divide it by the number of ordinary shares. Please take note of that. So we've addressed the first trick. So now the first trick is that the profit should always be after tax and preference dividend. Please take note of that. The profit we are looking at should always be after tax and preference dividend. Now let's look at the second trick. So let's assume that if you have a profit of, let's say, 100,000 and your number of ordinary shares is, let's say, 200,000 shares, how much are you getting as earnings per share? How much are you getting as earnings per share? If your internet is good, you can tell us. Just
0.5.
0.5.
It is 0.5. So that's 50 pesos. Most of the time, earnings per share are usually quoted in pesos. So 0.5 cedis will be equivalent to 50 pesos. Now, let me show you a trick with this. Now, let's assume that you were given a question. And the question that you were given, you were told that at the beginning of the year, January 2020, the company had shares of 100,000. So the company had 100,000 shares. Then on 30th June 2020, the company issued additional 100,000 shares to the general public. So it means that in total, at the end of the year, the total number of shares was 200,000 shares. If I had asked you to calculate the earnings per share, obviously it will be the profit, which in this case is 100,000, divided by the number of ordinary shares. This is the number of ordinary shares, which is 200,000. So in this case, you are getting 50 pesos. However, one thing you are failing to recognize is that if the shareholders gives you the money, if they give you the money on 1st January, right, you have the money to invest in the business to get more profit. Don't you think so? Now, what is happening is that these shareholders who gave you this 100,000 shares, they gave you the money on 30th June. So do you think, do we have enough time to invest this money that we are getting from the 100,000 shares to earn more profit? Do you think so? Do you think we have enough time to invest this 100,000 to get enough money in terms of profit?
No, the investment period will be 6 months.
Sure. So what it means is that the earlier the money is given to the company by the shareholders in terms of the date, the better. So if you then divide the 100,000 cedis by the 200,000 shares, you are not being fair to those shareholders who gave you money at the beginning of the year. So then we say that at any point in time, consider when the shares were being issued. So instead of you just doing the number of ordinary shares where you divided by the 200,000, we rather do divided by the weighted average number of ordinary shares. Take note of that. So in this case, this is how we go about it. We will say that the first 100,000, I mean the 100,000 shares, this one, was in the company for how many months? How many months was it there? How many months? January,
6 months.
Good, 6 months. So we have the 100,000 times 6 over 12, right? Then the second 100,000, so by 30th June, the total number of shares had become 200,000, isn't it?
Yes.
So we want to know how long did the 100,000 shares last? We said that it lasted for 6 months. And how long did the 200,000 shares, after it became 200,000 on 30th June, how long did they last?
6 months.
6 months. So it will be 200,000 shares times 6 over 12. Kindly check what you are getting. So this will give you 50,000. This will give you 100,000. So 150,000 shares, isn't it? Isn't it?
Yeah.
Yes. Now, this one approach, this one approach in which you can calculate this. Someone can also say that this 100,000 lasted for 12 months. That's what someone can say. This 100,000, the 100,000 shares was there January, February, March, April, May, up to December. Then the second 100,000 shares was there from June to December. So it was there for 6 months. So that person will use this approach. So the first 100,000 was there for the entire year, right? Whilst the second 100,000 that came, 100,000 shares that came, was there for only 6 months. Check what you are getting. Are you still getting 150,000 shares?
Yes. Yes.
So what I just taught you is what we call the weighted average number of ordinary shares. So it means that instead of we dividing the 100,000 cedis, which is the profits, by the 200,000 shares, we rather divide by the weighted average number of shares, which is 150,000 shares, isn't it? So now check what you are getting in terms of the earnings per share.
66.67 pesos.
So 67 pesos, right? Colleague, 67 pesos, isn't it?
Yes.
Good. So please picture and use 1 minute to assimilate what is on the board. Look at the two approaches. We have method 1 and method 2, right? Under method 1, you only look at the figures in total, right? The 100,000 was there for 6 months. Then when it changed into 200,000 shares, because the 100,000 will be added to the 100,000 on 30th June. When it became 200,000, it also lasted for 6 months, right? So you can call this the total approach. Then the second approach is like the individual approach. The first 100,000 went in throughout the year, right? It didn't change. It went throughout the year. Then the next 100,000 came into the year from 1st July to December, so 6 months. That also gives you the same answer. So this approach I just taught you is the approach that is used to calculate the weighted average number of shares. Any question? Any question on this? Any question on this? If you have a question, you can kindly ask. Any question on this?
So, Prof,
Yeah.
hello. Can
Yeah.
you go by any of these methods, or it's best to use the weighted average?
You said, can I go back on?
No, I'm asking with these two approaches, which one is best to use?
No, you should know the two. You get to a point, you understand why I tell you should know the two. No,
Okay.
but make sure you don't mix it. Please know that. Make sure you don't mix the two approaches. Otherwise, it will be wrong. Okay, so I'll give you one question, then we look at it. So that you'll be used to the trick in terms of the weighted average number of ordinary shares. So I'm sharing my screen so that we look at an example. I think I've check with your platform whether I've sent the IAS 33 note to your platform. Do you have it on your platform? Do you have the IAS 33 note on your platform? If you do.
Yes, it's on the platform.
Sure. So I'm sharing my screen here. We are going to solve this particular example. Let me see which example. This one. So let's do this. We are solving this. Sandra, kindly read the example for me. We are solving it together. So I will need you guys to pay attention. And obviously someone will have to take me through how I should go about it. And when you are taking me through, you have to tell me whether it's the method 1 or the method 2. Is that okay? So Sandra, kindly read the example for me.
Okay, so example 1, weighted average number of shares. Justina Co., a listed company, has the following share transactions during 2019. So for 1st January 2019, the balance at the beginning of the year is 170,000 shares issued. 31st May 2019, issue of new shares for cash, 80,000. 31st December 2019, so at the end of the year, 250,000 shares required. Calculate the weighted average number of shares outstanding for 2019.
Okay, so colleagues, we are being required to calculate the weighted average number of shares. After looking at the question here, who can help us go through it? And you tell us which method you are using.
Okay, so Prof, let's use method 2.
Hey, what you method one? I hear. Take me through the method 2.
Okay, so for method 2, 170,000 shares was an issue for the entire year.
Okay,
Because
so
1st January 2019. So yes, so we'll do 170,000 by times 12/12, and then plus the 80,000 shares came in on the 31st May, meaning that it was there for 7 months. June, counting my fingers, June, July, August, September. Yes, that's what I'm doing. So we all know. So June, July, August, September, October, November, December. So 7 months. So 80,000 times 7/12.
Okay,
And then you get an answer.
let me write it on the board and let's see whether we're on the same page then. So what Sandra is basically saying is that the weighted average number of shares of ordinary shares, she is adopting method 2, right? So I'm doing method 2. So you said 170,000 shares lasted for 12 months. Then the 50,000 shares lasted for 7 months. So in that case, what am I getting?
Two 16667.
So meaning, Sandra, you use the individual approach. You can take us through the total.
Yes.
You can take us through the total approach. I'm sharing my screen so that anyone will take us through the total approach. Who will try? Who is willing to try? Or will you try? That is if you are willing to. So that is if you are willing to. Why you are all scared of the methods? You should be able to.
Prof, we can do. I can try method 1 too.
Okay, but I want someone else to try. And else will you try?
I think it will be, we are going to use 170 by the first 7 months over 12.
So the 170,000 lasted for how many months?
It's lasted for January, February, March, April, May, June.
So it's up to
May. Okay, May.
How many months?
5.
Okay. So
okay,
you are saying 1,000 times 5/12.
Yeah.
Okay. Then what else?
All in brackets plus, that's 170 plus 80, so making 250. Yeah. In another bracket times the rest of the months it's lasted. That's June, July, August, September, October, November, December. That's 7 months.
Okay. So that's 7 months.
Yeah.
Okay. That's correct. So 170,000 lasted for 5 months. Then the 250,000 lasted for 7 months. Does it give you the same answer? Does it give you the same answer?
I'm not doing the calculations. I wanted to try.
Yes, Prof. It does. 216,667.
Okay. So that is how to get a weighted average number of shares. Let's solve 1 or 2 additional. So when the examiner gives you a question, this is how he's going to trick the question. He will ensure that you will need to calculate the weighted average number of shares. So you should know how to do it. The earnings per share standard is not difficult, but it has tricks. One of the tricks is what we are doing. Instead of you just dividing it by the total number of ordinary shares, if the days for the share issues didn't happen at the beginning of the year, then there's the need to calculate the weighted average number of ordinary shares. Otherwise, you'll be wrong. So you take note of that. So let's look at another example. So I'll share my screen. We look at it. So example 2. Sandra, kindly read it for me. So this one, colleagues, you are the ones going to solve it. It's not difficult. So whilst we are reading, someone should also be looking at it, or you guys should be looking at how you go about it on your own. Then after that, you take us through your approach. We are learning. We are all learning together. Okay, Sandra, kindly read for me.
Okay, so example 2. On 1st January 2019, Lockdown Limited had 5 million ordinary shares in issue. On 1st April 2019, 1 million new shares were issued. On 1st July 2019, an extra 1 million shares came into existence. On 1st November 2019, 500,000 more shares were issued. All issues were at full market price. Required, calculate the weighted average number of shares outstanding for 2019.
Okay, so colleagues, use 30 seconds to think about it, and so that someone will take us through it, how he or she would have gone about it. So anyone could try if you've been able to think about it, and you can take us through it.
Okay, Prof, method 2.
Why is it that you always use method 2?
I don't know, Prof.
You don't know, you reacting. So you choose method 2, then you force the other person to choose method 1. Richmond, I think you wanted to talk, so you choose method 2 so that Sandra will be forced to use method 1. Richmond, are you there?
Yes, Prof.
So if you want to try, please choose method 2 so that Sandra will be forced to do method
1. Okay, Prof.
Okay. But the rest, you can also try. If you've gone through it, you can just share your solution with us. We are learning. If you make a mistake, we'll correct it. So don't worry about it. So if you've gone through it, you can just share what you have with us. In examination, you'll be doing it on your own. You'll be doing it on your own. So you should share your solution, then we look at it.
Hello, Prof.
Yeah, Paul.
Let me try the method 2.
Sure.
Okay.
So method 1, it's good. Okay.
Okay, with the method 2. From the question, we notice that on January 1st, 2019, we have the fair shares to be 500,000. So 500,000 times January to December is going to be 12 months.
Yeah, 12 over 12.
So it's going to be 12 over 12. Then plus on April 1st, 2019. So I'll start counting my fingers from April. So
continue. For men, feel rich more.
So
continue.
So April, May, June, July, August, September, October, November, December. That is 9 months.
Sure. So 9
9 over 12 times 1 million.
Sure.
Then I move to July 1st, 2019, counting my fingers from July. So July, August, September, October, November, December. That is 6 months. So 6 over 12 times another 1 million.
Sure.
Then November 1st, 2019. It's just 2 months. That's November, December, 2 months. So 2 times 12, 2 over 12 times 500,000.
Yeah, you are correct. So what you just said, everything is correct. So let me write what you just said. Okay, so again, we are looking at weighted average number of ordinary shares. So Paul is looking at method 2. So Paul, in terms of your approach, you said the 5 million shares that was issued on 1st January lasted for 12 months. It went through the entire year. Then the next 1 million, you said that it lasted for 9 months. Then the next 1 million, you mentioned that it lasted for 6 months. Then the next 500,000, you said it lasted for 2 months. So please check what we are getting.
6,333,333.
I guess.
Yeah.
Okay, so we'll be taking us through the method 1.
Richmond.
Okay, Richmond, I'm listening. So let me share my screen in terms of the question. Then you can take me through it. Okay, I'm listening. I'm sharing my screen so you can talk.
1st January. Yeah. That's 5 million times 3 over 12.
Okay, so meaning that 5 million lasted for 3 months. January.
3 months. Yes.
Okay.
And then the 100, is it a 1 million? Plus the 5 million lasted for 3 months. So it's 6 million.
Okay.
By 3 over 12.
Sure. It's correct.
And then the second one, the July one, you add the 1 million to the 6 million, which makes it 7 million. And that one lasted for 4 months.
Sure.
And then the 500,000, you add it to the 7 million, which also lasted for 2 months.
Okay, that's correct. Yeah.
So we have 1,250,000 plus 1,500,000 plus 2,333,333 plus 1,250,123, giving us 6,333,333 shares.
Okay, I hear. So you said 5 million lasted for 3 months.
3 months.
Then 6
plus 6 million lasted for 3 months.
3 months again. Plus.
Then the 7 million lasted for 4 months.
Then
and then the 7,500,000 also lasted for 2 months.
Okay.
Let me show you the trick. If you add the numerators 3, 3, 4, 2, should give you 12. If not, what you are calculating is wrong.
This one. This.
Yeah, that's my trick. Yeah, the 3 plus 3, 6.
Plus this.
Plus, yes.
Okay.
So if you do it, you don't get the 12.
It means it's wrong. Okay,
yes.
so meaning with the first solution method.
TPPC, the Prof's Professional Class. WhatsApp or call us on 0550225537 or call 0502851858 or 0266897608. Email info@tppcgh.com. Enroll in our courses by visiting our website, www.tppcgh.com. Don't forget to subscribe to our channel.